Good afternoon, everyone, and thank you very much for taking the time to join us today for our investor briefing with Carpentaria Resources. My name's Patrick Nelson. I'm the Managing Director of Reach Markets. We're hosting the event on behalf of Carpentaria Resources today, and we're very lucky to have Quentin Hill, the Managing Director, here to join us for the iron ore investor briefing, which is an opportunity to hear what's going on in the industry, where things are heading, and also what's happening with Carpentaria Resources. So, Quentin, thank you very much for joining us today.
Patrick, pleasure to be here. I always like a chance to talk to our shareholders and potential investors. We've got a great story to tell.
Beautiful. Now, I'll just go through some housekeeping matters. First of all, any advice contained in today's presentation is general only, doesn't take into consideration your personal circumstances, and you need to decide whether it's appropriate for you. Past returns are not an accurate indicator of future returns, and I'll leave Carpentaria's cautionary statement up there for just one moment. Well, I just mentioned a couple more things. So today's session is a live interactive session. If you've got any questions, you can put them into your chat box, which will be open, should be open on your screen. If it's not open on your screen, top right-hand corner, open up the, click on the red arrow, and it will open up your chat box, and you should be able to type away. If the question is relevant to something that Quentin is talking about at that point in time, then I will put the question to him as we're going. Otherwise, I will wait till the end of the presentation, and we've got plenty of time to go through any questions that anyone should have at that point in time. The company invests heavily into telling the story of what they're doing and where they're heading, and these sessions are a really good way of keeping people updated and I guess giving you the opportunity to engage directly with the people behind the business and effectively the Managing Director, Quentin, who runs it. So, Quentin, thank you very much for taking the time today. I'll now hand over to yourself.
Yeah, great. Thanks, Patrick, and thanks for the attendees. Look, I'm going to give a concise snapshot of the industry and our place in it, and how we are moving the project forward to the benefit of shareholders today. So, and look forward to some questions after the session. Steel is the world's most important metal. Iron is the main ingredient of steel, and there is increasing global demand. Steel is a key ingredient for new technologies and economic development. It improves lives. You can't have economic development without steel. It is powering the renewables market. The estimated global turnover is $900 billion a year. It is a very large industry, and steel use is projected to be 50% higher. Now, saying those things, it's important to recognise the push for low carbon technologies, and there is low carbon steel being promoted in Europe, etc. Our project is perfectly positioned to fuel those needs and the needs of steelmakers as they transition. Iron ore prices are strong, and supply has its challenges, creating opportunities here. The tragic Brazilian disaster reduced the global supply, including the key area of pellet feed. We've seen the prices rise. There is an increasing demand for new high-quality iron ore supply as global quality is reducing. Increasingly, in the Pilbara, there are increasing costs to maintain that quality. I've returned recently from a trip to Japan, and the message from Japan is still very much Pilbara ores are declining in quality, and as our customers for our steel want lower carbon footprints and better quality steel, this is a problem for us. It is solved by higher quality iron ore. Forecasters say there's going to be a lift in the pellet rate in China from 14 to 18%. That is happening. We can see that, and a large supply gap for pellet feed in the coming years. We are seeing that, and that is driving demand for our project being the world's best pellet feed. Now, it's not just me saying this. High-grade iron ores, which improve efficiency, are increasingly favoured and harder to find. The Rio CEO, Jean-Sebastian, or JS, has said exactly this. The need for high-quality iron ore will increase in order to improve the environmental footprint. That's what they are trying to do. It's very difficult in those deposits, and our Japanese friends are telling us to keep moving forward. Major producers are investing in higher grade mines and opportunities are very limited. Fortescue have approved the $2.6 billion Iron Bridge project for 20 million tonnes of 67% Fe. That should take some years to get into production. They have also confirmed it is bidding for part of Guinea's high-grade Simandou deposit, which is locked in the centre of Africa and highly infrastructure constrained. These moves are to protect the market share as demand for low-grade falls, we think. In other moves, Vale's confirmed a new pellet feed product, and also that confirms its view on where the future lies. New higher quality iron ore projects are needed. They will take market share from lower grade products, and good opportunities are extremely limited. Which brings us on to our project, the Horsens Iron Project. Just working, there we go. It has the world's best quality product at 70% Fe, the highest content. We call it Horsens Super Grade. Our pre-feasibility study is based on 10 million tonnes per annum. It's put us in the leading global position. It has excellent returns and high margins and value at over $1 billion NPV. Mitsui have recognised the value of the project and its place in the market and have committed $5.4 million to the feasibility study once the balance of funding is in place. And the infrastructure is established nearby, and I'll show you the importance of that in due course. This is a chart from Wood Mackenzie. On the right, on the vertical axis, you have rates of return, and on the horizontal, we have iron ore quality. Now, if you pick some decent hurdle rates, say 15%, projects under 15% are unlikely to be financed unless there's special circumstances, such as Iron Bridge. There are only 3 projects above that, and Horsens is by far the largest project, the largest in tonnes. If you look at the DR grade, which is sort of up around 70% Fe, there are only 3 projects, and there's only one that is actually above the rates, the 15% hurdle rate. This is important because DR expansion is supply constrained. We're talking to the right parties in that area, and I'll come back to that in a minute. But the message here is Horsens is a standout as a higher quality mine, and the opportunities are very limited indeed. In terms of other producers and how it can compete with the existing producers, well, it can. On that cost curve from Wood Mackenzie, with our value in use and our low costs, Horsens would be at the front of the global cost curve on a value in use adjusted basis, somewhere around $20 or $25 a tonne, right at the front. That's where you need to be for 2 reasons: to be competitive through the cycle. And if you're competitive through the cycle, the banks will help you fund your project. So that's very important for shareholder value. Just moving on, our customers agree with all of those things around the market and so forth. We have 140% of our production under letters of intent with high value blast furnace and DRI customers. The quality is exceptional. The physical properties and chemical properties are just what pelletizers need. It supports our customer-led development plan. So there is no doubt about the ability to sell the project, and we have targeted the highest value markets, those direct reduction and pellet feed markets. On to some of the results of the feasibility study. GHD have done the feasibility study independently. At today's prices, we think a revenue of around $110, $112 a tonne. It's a 10 million production over a 20-year mine life. Here are the results. what we've got is an FOB price of $33 a tonne, which is very competitive, and an all-in cost to China of under $50 a tonne. At today's prices, where it's around $100 for a 65% index, the margin is around $66 a tonne. So that generates around $660 million per annum profits, which would pay back the $1.4 billion capital in less than 3 years for very tidy returns, indeed around 50% equity returns. Under the PFS conditions, the capital is paid back in 3 to 4 years. As I said, 20-year mine life, and NPV at today's prices of around $2.4 billion. Now, in the next slide, I've separated some of the costs out for you so you can see where we actually make up the difference on other projects. It's the soft ore and the high quality product and the existing infrastructure that offset other costs and put us at the leading place in terms of costs and rates of return. The capital is very important for rates of return. So in terms of OPEX, the world's best quality product gives us an advantage of around $35 a tonne over a 58% product and around $13 a tonne over a 65% product. So we just bring that back off our costs to get our 62% adjusted figure. It offsets the higher mining costs and the higher logistics costs that we face because of the low grade and the distance. The processing costs are also very low because of the soft ore and the cheap power. And look down there, it's about $8 a tonne. We know that other magnetite projects in Western Australia are much closer to $40, $50, even $60 a tonne, depending on what you include in processing. For us, the net result is around $25 a tonne OPEX, 23 or so on a 62% basis. The financial metrics doesn't just end with operating costs, it's the capital cost that's important too. The existing port and rail saves around $50 to up to $100 a tonne on capital intensity. Now that is transformative for us. The lack of complexity in the soft ore means that it competes well on all the other points, and the capital intensity is actually better than some Pilbara mines, existing mines, and many global hematite projects in Brazil. This is the secret to the leading position. The capital intensity of the plant is also much lower than other magnetites, but clearly not comparable to hematite projects. However, where that $140 capital intensity leaves us is in a very competitive position and similar, if not a little better, to other developments that have happened, really good developments that have happened more recently. Price premiums for the higher quality are expected to expand over time. They're important for our project, and demand for lower grade is expected to decline. You can see from the price chart there, where we've got the different quality ores, that for more than half of the last 5 years, the premiums have been very strong and discounts for low grade very deep. The long-term forecast is around 20% to be the normal condition, which will translate to around $25 a tonne premium for super grade. Now these are forecast by Wood Mackenzie because of the increasing environmental costs, the blast furnace technology nowadays requiring higher grade ores, and long-run steel margins resulting from the structural shift in overcapacity in China. Now, on the right-hand column, I thought I'd tell a little bit more about the premiums and how they work. It'll be made up of the spread between the 62 and 65. At the moment, it's a little bit lower than our base case, as steel margins are squeezed a little bit, but it looks like they're getting higher again. Then there's an extra 5% of iron units that need to be factored in. Today's price is a little bit higher, and we think that that's sort of the normal condition. That's also in line with impurity penalties being much higher as well. And then there's a magnetite premium, which is based on the energy in magnetite, the productivity benefits, the low impurities, able to blend those down and make better steel or reduce your cost downstream, but also the physical properties of the magnetite. So we think that's, varies between $4 and $10 in normal conditions. Now, lastly, at the bottom of the cycle, you can look at around December 2015, with super compressed premiums of, say, $5 a tonne, super grade would still be cash flow positive. Okay, so that's around $40. And that is what people need through the cycle. It gives the banks confidence, and everyone else should get confidence from that as well. High-grade iron ore is much more efficient, resulting in carbon abatement, and direct reduction steel is low carbon. So I'm focusing here on the direct reduction market, but also the need for steel makers to reduce their carbon footprint, certainly prevalent in Europe, and there's many research projects trying to get a zero carbon footprint steel. Direct reduction is the key to that. Direct reduction steelmaking uses a third to a half of the carbon than a blast furnace by using natural gas instead of coal. It requires a rare quality of iron ore product that few mines can produce, and I showed you that there were very limited opportunities for new mines. And new technologies will require on this direct reduction, and that will require the highest quality ores. So this is set for the future. The DR method is the method of choice in the Middle East, so I said I'd come back to this. In Riyadh last month, our team attended the first annual steel conference for Saudi Arabia. High-level speakers said steel is a key pillar of Vision 2030 to broaden its industrial base away from oil. It's a key pillar because if you have solid steel industry, then that feeds another, I think I counted 6 to 12 different pillars below that it supports, right? Now, they highlighted that there was a lack of iron raw material and they needed to fix this. They need to invest in both upstream and downstream areas to make that vision work, and we are doing what you would expect us to be doing in that area, and certainly we attracted a great deal of interest in that conference a couple of weeks ago. We are, and this is part of the story, we are engaged with the buyers needed to build the projects, and some already intend to negotiate a role at the end of the BFS. We position the project as the leading high-quality iron ore development projects where opportunities, again, are extremely limited. I've said that the key strategic off-takers are intending to negotiate a role at the end of the BFS. We're in active discussions with Tier 1 and other credible parties, and we are undertaking work programs to meet some of those investment needs. Now, we are taking them at their word, and we are constantly following those things up, but we are confident that the de-risking projects are important for the development of the project and the company. What are we doing? They're underway to reduce risk and explore opportunities. Improving geotechnical definition means detailed assessment of pit slopes, and the results are expected soon. It's just an extra generation of data collection there. Increase the definition and design options of tailings storage and embankment. So we recognise that tailings disposal is an important issue for investors and strategic investors following events in Brazil. This work is providing design options suitable for investors and also exploring the opportunity to integrate the construction of the embankment with the mine plan, and that should give us some cost savings, or at least a tighter control on those costs and tighter definition, which is also important issue that was highlighted via due diligence as well. Better demonstrate the low variability of the ore body processing parameters. We're confident that with our interpretation, this work is directed to simply demonstrating the low variability of the ore body and the robust nature of our assumptions. And we're confident in our interpretation. So that should, as I said, simply demonstrate this low variability, which will be an important de-risking step. There are near, medium and long-term value-adding milestones for the company. Securing a strategic and or equity cornerstone investor is the top priority for the company, and we're putting in place the steps that we need to do that, be it evolve the company shareholding, evolve the company partners, or evolve the company's skill sets. We have another milestone will be the BFS completion. Then we plan to have an additional strategic transaction, finance and production. Each of those steps will add value to your investment or your potential investment there, with the nearest one being securing strategic or equity cornerstone investors. That will trigger the rest of the BFS funding. Our development timelines are clear, with multiple indicators guiding our path to production. We can complete the BFS approvals in 12 to 18 months and approvals, finance and construct in 18 to 24. So production from 3 to 3.5 years from accessing that BFS funding. So in summary, it is the right time. The company has never been closer to offtake. The market has never been better set for investment in our project, and we're committed to developing this flagship project of ours. We've got work programs to improve the project definition and meet some investor needs. It is the leading independent DR grade pellet feed project in the world, and that has gained wide acceptance with the strategics. We have a number of parties indicated they're willing to negotiate a role post BFS and are watching progress closely. Someone will make a lot of money out of this project, I'm sure, and we are working very hard to make sure it is our shareholders. And the company is very confident that the project can attract that strategic investment to unlock the value for shareholders. Thanks very much.
Thank you, Quentin. Now, there are a number of questions, and some of them are quite similar, so I'll group them together. A few people have asked about Mr. Gupta, and has there been any approaches or interest shown from Gupta's group to Carpentaria, regarding becoming an off-take partner or a purchaser of your magnetite?
Yeah, look, Mr. Gupta is doing great things down at Whyalla. We know that that he recently missed out on a project down our way. He's investing heavily in increasing his current steel production. There's a sort of a next generation project, and then a more ambitious project. Our assessment shows that the iron ore in the region is set to run out somewhere in the 2020s, and he will need further supply. Now, we are the best logical choice for that. So the synergies are compelling with Mr. Gupta. I'm clearly not in a position to say whether we are or we aren't talking with him about those things. But the Whyalla port, there are also very compelling synergies for both Mr. Gupta and for Carpentaria to use the Whyalla port. So we are doing the things that you would expect there. But ultimately, those things are a matter for Mr. Gupta, and we understand the strategic environment, and our questioners are quite right to recognise the value that we offer that particular development.
Okay, Peter has asked regarding off-take partners. It's been a year from when Mitsui deal. Wondering, where are we at with getting other off-take partners aboard?
Yeah, look, we've positioned the project as the leading iron ore development. We're building deep engagement with those strategics, and we're putting in place key elements to assist the next phase of development. We know that strategic balance sheets and offtake contracts are the key to developing the project. The strategic accept that we're leading. Their view is once the BFS confirms the PFS, the market will pull the project into development. Now onto the nub of the question. What some of these off-takers require items identified via due diligence to be addressed, and we're addressing these. Some have commercial reasons to delay investment. Timing will suit them later. And some have guidelines requiring a completed BFS to match their investment risk profile. And some are currently in negotiations with us because their need is becoming very clear. So I can't put times on these things. We're talking to the right people. We're presenting it in the right way. We're doing what we can to get them across the line. And we are taking absolutely forward steps. I understand that I guess it's been a little while, but the market has not changed. It has in fact got stronger, and so has our engagement with these off-takers. So we're still very positive on that, but unable to put a time on those things.
Yep. Okay. Peter's also asked, is there a scenario where you could start producing, say, 2 million tonnes a year and then increase production as a way of, say, getting the project up and running?
Yeah, look, we have our base case strategy, and we understand that it may not be the only path to shareholder value, right? We explore the value wherever it is, and some investors will perhaps look for control or those sorts of things, and we are open and agile to those discussions. So that's the first point I wanted to make. The second point is we have looked at different sizes and configurations throughout the history of the project. Look, the large component of fixed infrastructure needs to be paid back, meaning scale is needed. If the project goes any smaller, the returns reduce and become less attractive. But scale has its advantages. If it was any smaller, then it wouldn't be attractive to the strategic players. So we think that we've had a good look. We're always having a look, but we think it's about right in the sweet spot at 10 million tonnes.
If there are any other questions, please put them through. We had a question from Neil regarding timing of bankable feasibility study. I believe you mentioned that on a slide earlier. Is there anything more you would say to that, Quentin?
Look, we understand how long the study will take, and in line with approvals. The work that we're doing now on the tailings and those sorts of things are part of that bankable feasibility study. So it doesn't shorten the timelines. The real timelines on that are the big cost items like the drilling and the completion of the EIS. So we're confident that once we get the funding, the timelines will move very rapidly, and value will accrete quite quickly. But again, until we're ready to announce something, we can't say anything about the timing of the BFS funding.
Okay. Jenny has asked, is there a chance that you could be bought out by an existing producer?
Well, absolutely. There's always that chance. We see the key paths to value, and we're setting the company up to be in a position to extract these values. There's a lot of strategic reasons why this is going to be developed. From the miners, they'll be seeking to gain marketing edge and portfolio value with complementary products, or risk losing this to others. So there's whoever's selling hematite pellet feed in China have an opportunity to increase their sales by blending with our material. The miners, there'll be some miners out there seeking to protect market share via blending their higher grade ore, or blending higher grade ore with their lower grade products. So any of those producers that have lower grade products are under stress in the future, and this is why Fortescue is doing what it is doing. So it'll be interesting to see if those other lower grade producers follow suit, and they're certainly we are certainly the right candidate for that. But also these miners that are seeking to protect their pricing power in the niche markets like the Middle East, certainly we would be attractive to those people at the right time. So there's a lot of value built in this project, a lot of value upside from its current market capitalisation for sure.
Frank has asked a question about funding for the BFS, and are you sufficiently funded up to the BFS being completed? Do you just want to talk about that, Quentin?
So, look, I think in our last quarterly we had around $2.5 million in the bank, maybe a bit more than that. We'll be putting another quarterly out shortly, and also some of the results of the work that is nearing completion. The bankable feasibility study for a 10 million tonne project is around $25 to $30 million. It's a significant funding challenge. This is why we have Mitsui have committed $5.4 million. We think that another key strategic or a key equity cornerstone investor will trigger the rest of that funding. So the company is focused on bringing in that next level of strategic funding that will trigger the rest of the funding. So that's the trigger. So there are a number of things that we are doing to make that happen, including negotiating, including looking at the skills base of the company, looking at the shareholder base of the company, and looking at the partners we need. And the board is very focused on getting all of that right to generate the value for the shareholders.
Excellent. Graham's asked, what is your prediction for iron ore prices going forward, and are you concerned about Vale, Brazil coming back online?
Yeah, it's a very good question, Graham. The first, no, I'm not concerned about that. Our model has been robust for the last 3 years, focusing on increasing pellet use in China, the need to diversify supply risk away from Brazil and the Middle East, and that's only got stronger, and the long-term trend to higher quality ores, and there just aren't many opportunities out there for higher quality ores. When the long-term forecasts for iron ore are around $60-65 a tonne, we are bankable under those prices, but much new production is not, okay? So that means that our niche product will remain a niche product and will be highly sought after. So at those lower iron ore prices, Vale will be producing, will come back, and what will happen is they will push the Chinese production that's filled the gap, they will push that out, and then the Chinese will be looking for a new magnetite product, and that will be us. So the short answer is that the Vale accident has helped lower grade, higher cost producers. When they come back, they will be pushed out, but there will still be fantastic metrics and incentive to bring this project into production.
Okay, Jenny's asked, what is the turnover forecasted when you're in full production per annum?
Okay, so 10 million tonnes per annum, an operating cost of around $50 or a bit less, and a margin of $40. So revenue of around $880 million per annum, with a profit margin of around $400 million. That's the PFS case. Today's prices, that's I think it's $1.1, $1.2 billion. Or $1.1 billion of revenue in today's prices. And if you have a look at the price history of these sorts of things, there's it's clearly cyclical, and there are big wins to have at the high prices, and that's what we're looking for.
Okay, Nicholas has asked a question. I know you'll be limited on what you can say about this one, but going forward, will current shareholder equity be further diluted with any further funding deals?
So as our shareholders will know, we've been very focused on delivering value in the sense that Mitsui had a non-dilutive deal. We're still looking at non-dilutive deals, and confident that there is the will to do them. We will need additional funding, however, on top of that. So unless shareholders are in a position to participate in what will be a highly rewarding investment to complete the bankable feasibility study. There is dilution, and then I guess further dilution in terms of developing the project. However, there is much reward to, as we've been saying very much throughout the presentation and for the last little while, there are a number of big companies that are willing to negotiate a role at BFS. It is at BFS where the real value is going to be created. So any investment in that BFS funding step, we think, will attract significant returns.
All right. I think we've got through everyone's questions. If I've missed anyone's questions, please put it back in so it gets to the front of the queue again, and I'll re-ask it. But if you have any further questions, you can jump onto Carpentaria, onto their Investor Centre, and there's a spot there where you can post any questions at any point in time, and they'll get to Quentin, and he always makes an effort in coming back to everyone's questions. So you've always got that available to you. For anyone who isn't a current shareholder, CAP, C-A-P, is the stock code. You can get onto the market and put that into your watch list or go and buy some. If you've got any questions, you can speak to my guys here in the office. We're well across Carpentaria and big supporters of it. So by all means, give us a bell here at Reach Markets, or send through any questions that you wish. Quentin, thank you very much for the presentation today. Thank you to those who have attended. But we'll call the session to a halt now if there are no further questions coming through. Thanks for those people that asked the questions today. Really good questions. And there were a few people that emailed questions through, so Quentin tried to incorporate those questions into his presentation today. I hope they've all been answered for you as well. Quentin, I'll leave the last word to you.
Well, thank you all for listening, and I look forward to you following our progress and getting some big returns on your investment in due course. Thanks, Patrick. Thanks to the listeners.
Thank you, everyone. Cheers and good day.